All right, good evening, traders. Firefly is requesting approval. Of course. Good evening, everyone. Good to see you all. Happy Tuesday. Happy Tuesday. My apologies. I hope that some of you, after our Monday night discussion, took our Roblox. I don't know what happened. I swear I had it set up and ready to go, and I just didn't pull the trigger on it. And so then I put the IBM out because I was like, well, that looks good too. But the Roblox, had that trade been in place for the morning, phenomenal day for that. Anyone look at that one? Anyone do that? Can you guys hear me? It's so quiet. Let's start with that. No one's saying anything. So let me start with, can you hear me? Can you see my screen? We can hear you, PJ. Thank you. I think everyone always assumes that someone's like, well, yeah, we can. And someone will say it, and then no one says it. Thank you, PJ. Hi, Vladimir. Good crowd. Great questions. Yeah. So it doesn't seem like anyone took the RBL Roblox. RBLX? Yeah. Um, all right. We'll give it another minute or two. Steve C is here. Steve C, I was talking about Roblox and how I had it all put together and then I didn't put it out. I did take it this morning. Um, yeah, sometimes it's like I start getting the trade built and I by the time it's like I like the way it looks and then get into it. I think it's fine for the setup on the morning. Futures are pulling back a little, so same. You took it this morning? Love it. I didn't and you know what? I kind of am like, I'm like, well, I didn't put the alert out, but then at the same time, I love when you guys trade outside the alerts, especially things that we discuss in the watch list, right? Like it's you know meant to be a supplement to your own trading, of course. So I hope that you're building the confidence to just be like, yeah, no, I took that one already. Phenomenal. That's where you got Reddit. I love it. Steve C, pull it, ready to do it as it comes. Love it. Good evening, Gene. Good to see you. Good to see you. All right, let's crack. Let's get cracking. Oh, where's my recording? Oh, hold on. Hold on. Everybody's here now. That's important. Still working on confidence to trade more. Love it. And honestly, building the comp, building the more really might come organically with the market posture. We were -2.5. That's not a lot of reason to trade. Now we're a zero. Now all of a sudden we might crack to a 1.25, 1.5. That might help where you're like, hey, market conditions are better. I'm feeling better about my rules, my process, and the trading plan. I believe confidence. That's where the I always tell people confidence should come from. Let's start recording. Confidence should come from the trading plan, not the results. Right? The results will work themselves out when the trading plan is right. Results will fluctuate as markets fluctuate. Obviously, love the comments so far. Good to see everybody. Welcome to Market Watch Group Trading Foundations, part two of the Foundations Tuesday, Thursday segments. Um, this is the open forum. Anything goes, but anything goes, right? I like a continuation. I like to pick up a little bit of our own. I want to run a couple of searches. Let's just see where it puts us. Love paper trading as well. My name is Scott. I'll be your host, as always. Keep in mind our subscription service is for education, illustrative purposes only. Nothing we do or say should be construed as a recommendation to buy or sell any security or financial product. We're not brokers. We're not advisors. Yada, yada, yada. Okay. Mm. He can call until he's blue and until the cows come home, until the data supports it. Let's just go straight to the data. Did you guys talk about this? Um, it was not horrible. Wasn't horrible. I thought it was going to be horrible. Did you? Was anyone else there where I'm like, oh man, what if we upticked a little here? We thought we went from a slight downtick to point 0.2. We went from a point 0.1 to a point 0.3. Wait a second. Did this have a no? What was our final numbers? Um, why are they not updating that? I saw it earlier. Okay, let's just get some CPI numbers. That's not what I wanted. That's not what I wanted. Why am I having a hard time finding like the actual data? Mhm. Huh. I swear it used to be easier to find this stuff, right? Oh, there we go. Sorry, never mind. Mild rise. Mild rise. That's what, okay, I think it was. So slows to 2.3, smallest increase. I don't have a subscription. Yeah, until it starts going back down, the Fed's not going to do anything, period. So, uh, yeah, I don't think there's much to say about that. Let's see what the market thinks about the Fed real quick. And then let's look at the trade we put on, the trade that again, it doesn't look like there's many, but the, let's get some symbols. A, what are you in? We discussed at length RBLX. I didn't end up putting the alert out. But some of you and me may be in that trade. I did put it in IBM, but it came late in the day. So you may or may not have seen it, placed it. We'll look at that one. Reddit, we'll look at Reddit. Because I agree. That was definitely a setup. June is our next meeting. June is 35 days away, 5 weeks. The expectations for June are pretty low. I was July and I've moved to September. Feel free to post where you think our first cut is going to come next. The market for July is looking more along what for me, is no change, almost 2 to 1 for no change. And then September, that's the first time we really, but there's still a good number of people who think no. And I'm skeptical that there's going to be 2 cuts this year. That's just me. Okay, so let's talk about the market. Well, let's start here. IBM. What's the thought process? Um, Flag. That's our thought process in situations like this. Pull, consolidation, break. You can see the stochastics turning. I love when things are overbought and stay overbought. Love it. Some of the best bullish moves you find You'll find people too often are like, "Oh, but it's overbought. Look at it. It's above that green line. I put that green line. I can put that green line anywhere I want." That overbought doesn't mean that. In fact, overbought means there's a lot of buyers and it's itching. We talked about these conditions, if you remember, and we said it's not like there's no money out there. For the last 4 months, we've had a full employment, a full labor market, all contributing to their 401ks and 403bs and 457 plans and pensions and IRAs and everything that they're, and that's just little bits of money going to the institutions every week, every week, every week. Boom, here's some more, here's some more. Now, what are the institutions doing? Are they on drip programs where they automatically stick it in? No. Maybe, but if it's bullish, they're putting that money in. But right now, are they like, hey, no, they want to see how the tariffs play out and they're like testing the waters and but there's powder in the keg. So when we see things like this, we're ready to. I mean, we've talked about, hey, if it's going to be a V, we better get in. We got in, we made some money on different things. Same kind of a thought process here. So that was my thought. Is my stop loss way down here? No, this isn't a support bounce. This is a flag break, which means the flag is kind of the level. So I'm basically wrong if it falls back below that. I'm you know, not gonna. I think I maybe gave it more room than that. Let's see if I have it. Um, I'll pull it up. Let me pull it up. Mhm. Okay. Uh, stop 249. Yeah, you can see I'm giving it a little bit of range below that flag, but I'm not letting it. I don't have to wait for it to take this out. And in fact, shoop, you can see that's down here underneath this first white candle with the expectation that we think is going to go ahead and move. That's the trade. Ambitious, yes, target up here, but I feel like it's that's the kind of move that we can have right now. That's the thought process. Options are pretty cheap, you can see, and should have at least a 3-to-1 expectation. Where are you? Uh, 275, close to almost 3-to-1. That's what I meant to say. At least, almost. I mean, almost. Questions, comments, concerns about that? Let me know. This was the trade we discussed. Um, Not this one. Let me move my chart. I'm going to back this to 6 months real quickly. And this was the trade we looked at. So there, it was like kind of iffy there. We're like, okay, yeah, we like it. And you can see it. It would have gotten you even a little lower than yesterday's. So yeah, good move. And at this point, someone would be like, well, am I too late? Yeah, it's hard when you miss a 5%. If you thought, yeah, I like it here on the entry, and then you miss a 5%, it's tough to want to catch that late. Reddit, however, Reddit, you can see looks just fine. And if I move this one to Heiken, I could have a stop just underneath here, taking about $6 of risk. 90. God, that was 30. That was 30 plus points. 34? 140? Okay, 140. Stephen C, you took it. How do you like my target? 140. What was yours? More ambitious than me, less ambitious than me, as ambitious as me. 140 was yours? Oh. Ooh. Oh, you guys went through it already today? And you guys came up with 140? It's like magic. Okay. Okay. 140 I like. Stop. Um, like I said, I think you could go down here 6 points. 140 is what? 27? 6 to 27? Four plus? All right, I might just go ahead and put this one out for tomorrow. Should we build this one? Maybe we should. Let's talk about the market. Maybe run a search. We'll finish with this. That way you don't leave me. You're like, that sounds very needy, Scott. I'm just kidding. I just like the order. Um, let's switch this back to standard. There's some good stuff. We said there's some good stuff. You're never gonna miss things. It's a little bit behind the cycle, a little bit above the cycle. What do we know? That's 2 days in a row of volume. We haven't got to do this for a while, but let's duplicate this. And then, whoops, one there and one there. Um, no, I don't want that. Um, wait, what did I just do here? I think I just did something wrong. That's what I meant. Okay, there we go. Buyers and buyers. Okay. So now when we come down here to our boom, boom. Remember we said volume tends to lead. So all of a sudden we're going to a 2-0. That's like a now it's at least a point 0.5 for the buyers, maybe even higher, maybe even a 0.75. Right? You'll notice how our posture, even already, whoops, that's the wrong one. Market posture. Um, long-term trend. Let's just talk about this for 1 second. Sorry. I find this interesting. Boom. Broke this. We're going to give that a quarter of a point to the long term. We're going to quarter of a point here for a higher high on the short term. Another quarter of a point on the volume. I would imagine our VIX is going to get at least another half a point, possibly. I think we're going to get another point and a half out of this thing. I think, yeah, this is we even said, hey, are we going to see a breakout? What's it look like? Works for us. John Wells says, I agree, 100%. All we do is trade what we see. What do we see here? We see exactly what we wanted to demonstrate. Buyers continuing to gain further control. Let's look at that VIX real quickly because I think, yeah, let's get some trades ready to go. If our posture is going to improve, we're here for it. And there's that VIX. Look at that institutional. John, you're right to speak of the institutions. We're almost back to this right here. Almost back to this, and even more, getting close to that mid-teens. It's better and better. So, could we see some kind of a little like where it just disrupts a little and then bam, we're that. Yeah, that's how fast it could go. So we're not here to miss things. We're starting to see increased bullishness. Um, Great. Love it. Fabulous. Um, let's go back. Let's go back. Let's start thinking about this a little bit. Um, Reddit. How's everybody's Morgan Stanley? Still got a piece? Still working some profit on that, I hope. Nice day today for financials. If you haven't sold any yet, I would think you're starting to at least want to take some profit there. But I would imagine, I mean, it did hit its first profit target, 129. A little bit ahead of that now. Okay. Never got in. Price jumped before the entry. Okay, understood. I get it. I get it. I lost the. Oh, neither one, huh? Shit. Shit. Okay. Dun, dun, dun. No, that's the wrong trade. I'm like, I was talking about Morgan Stanley, but I meant IBM. Primary target 285. Let's get this to IBM. Oh no, Reddit. Sorry, you guys, I'm losing my mind here. We want to build a new Reddit trade. We already walked through the IBM trade. Let me get a new alert up here. This should be fun. We should have a good time here. Working session, right? Working session. Where's my template? Also, my template. Something got built on it. I keep forgetting to. I keep forgetting to erase it. Give me 1 second. I'm gonna do it now. Okay. And now Steve says, need a little practice. We all need a little practice. I agree with that 100%. Let's do it together. I'm going to save this. This is for tomorrow, 05 14 25. And this is going to be for RDDT. Reddit. Swoop. Reddit. I like capitals. Reddit. And Um, I know we said the we're bullish here for sure. We said that our primary target was 140. 140. That's up here. Intermediary, maybe I would say what's the high of this? 126? That seems like a pretty that's about the same place over here. 126. That's a little zone of where could I take a little profit, ease the pressure? Yeah, not necessary. Potential take profit potential. If you only have one contract, you're not going to do it there unless you're done there. So just think about that. Stop range. What did we say? Let's go back to the Heiken-Ashi. We went back down here. So we said 106, 107. It's about $6. Yeah, okay, 107.25. Let's just say it was 107.25. A little bit of room. You can go a little further low if you wanted to. We'll say 105.75. And you might be like, wow, Scott, you just kind of throw the numbers out there. Yeah, I mean, look, a range is a range. You can see it when you go look at it. You can see how tight it is. You can see if it needs more room or not based on the way you identify support levels or whatever it may be. Yeah. Entry. I mean, we're valid now, so I'm just gonna give it like 112.25 up to 113.25. And there's even a little bit of flexibility above that. It's not like it's invalid above that, but it's most valid in this range. I'm gonna put this one at 7 to 10 days. 7 to 10 days. All right, what's our reward to risk here? If we're getting in at 112.84, you're talking $21.16. 21, no, 27. Sorry. I'm like, wait, that seems light. 27.16, basically six and change. We'll call it 675 on the other. 4 to 1. 4 to 1. I'm going to give it an approximately 4 to 1 reward to risk ratio. Volatility index. Stop me if anything I'm saying as I think out loud doesn't make sense. If you have any questions, the vol index is low, but still expensive. What does that mean? The lowest it's been in the last 6 months is a 60. Right now we're at 68. We're really close to that, especially when you can see we've been up here at 120, twice that. The options were substantially more expensive down here. But since earnings, big bleed off. So the thought process is now that it's likely done. We're likely to stabilize here. I would be willing to buy an option, but they're going to be a little bit expensive. Um, so I might be more inclined to only go to June 6th, where it's 24 days. I only need 7 to 10. If it gets to Friday and it's still working, then I should have time the next week. So I won't need more than worst case scenario, we'll say is the 23rd. Worst case scenario. Can I still do a June 6th where I don't have to pay as much for the option? Oh, you can see they're pretty expensive, right? They're pretty expensive. The 115, these are, what's the, no, I might have to go to get the liquidity. I don't love the spreads on this, but that might just be because the market's closed. Pardon me. Woo! Oh, number four. Those are my long COVID symptoms. I have like inordinate numbers of sneezes, 4, 5, sometimes 6 in a row now. It's crazy. Never used to have that before I got COVID. It's a real thing. I looked it up on ChatGPT. Okay. June 20th is I think that makes sense. You get the liquidity. How did the spread look? I don't love these spreads for this much open interest. I would have to imagine it tightens up. But even still, man, I think I could go to the 130s. Now, this is where I had somebody say, "You're going out of the money. You're crazy." I'm not crazy. Why do they say that? Because they hear that a lot. I heard it a lot. I've had to encounter this options misconception for the last 20 years. And people are like, well, have you ever heard them say if you buy out of the money options, you'll eventually be out of the money? It's very clever. And I'm like, whoa, why? Why do they say that? They're like, well, because 70% of options expire worthless. I'm like, what? Out of the money. If they're out of the money, they expire worthless. 70% of them. I'm like, well, when does that happen? On expiration day. Great. Guess where I'm not going to be for this trade? In it on expiration day. In fact, does it matter if we're buying the stock? No. No. Um, so yeah. It does not matter because I'm only trading the underlying, right? Only trading the underlying. Bill, what's 80? I didn't see the 80. Um, so let's look at this. Let's just pop this in now. Oh, percent. Now you might be thinking, Scott, look at your P&L. That looks horrible. Well, we didn't make our changes yet. Let's get our target 140. That looks a lot better. Let's get our stop in it. What did we say it was? It is expensive, though. These are expensive. Uh 107.25 down here. So we're not willing, 107.25. Okay. Now these are the 130s. These are out of the money for sure. But I'm gonna buy less of them. I mean, even if I only do one, that's $230 of risk, right? $230 of risk, but to make $1,180 of gain. That's a great reward to risk ratio. I'm 5 to 1 there, maybe even slightly better. I have an objective with options: meet or exceed the stock. The stock was 4 to 1. Now that we're building it into an option, and this is including carrying this trade not till this Friday, a week from this Friday, the 23rd. So we're accounting for $11 a day in time decay. 1183 divided by 231, 5.12 to 1. So my 4 to 1 became a 5 to 1, buying the option. Well, you might be thinking, well, what if I was willing to pay to go in the money, Scott? Because in the money has intrinsic value. It's better. It's in the money. Well, let's test it. Let's see if you're right. Now, in order to do it, I'm going to have to find the lowest possible risk I can get here. 545 to make 2100. 463 to make 2300. Is this a bad trade? 545 to make 2100? No. But the dynamic is exactly the same. I'm right at 140 whether I do one 105 call or two 130 calls. Right? I'm right at 140. I'm wrong at 107.25. I'm giving it to the 23rd. One of these costs 1400, almost 15. Two of these cost about 750. So less capital invested. 545 risk versus 463. Not a huge difference, but $80. I lose 80 less potentially to make 2130 versus 23, 200 more. So it's a better reward to risk ratio. Is the other one bad? No, it's 5 instead of like 4.3. Well, that point 0.7, that's mine. I want it. It's mine because I did the math. It's mine because I was able to quantify that two out of the monies is mathematically superior. I don't believe it. I don't like think it. This is the math. This is our target. This is our stop. This is our time frame. This is position sizing to keep the risk somewhere around 500. This is a little below. This is a little above. As close as we're going to get. Pretty standardized. One's going to slightly outperform the other. What are some other ways to look at it? What if tomorrow they announced that Reddit is in fact a Chinese spy company? Dun dun dun. And the stock drops 30% overnight. Both these trades are going to be wiped out. They're going to go to zero. Would you rather have one trade at 1465 go to zero or two trades at 385 go to zero? I'd rather have less skin in the game if there's ever a chance. I prefer that. So, I get why the people who say be careful with out of the money options. I mean, they like to be clever. Is there a chance that if I buy those 130 calls, I'll be in the trade on expiration day? No. Is there a chance if I buy the 105 calls that I'll be in the trade on expiration day? Also, no. The trade I pick doesn't alter my exit strategy. Exit strategy is determined by the chart, not by the trade itself. What do we think? Does this make sense? Questions? So for me, I would end up with this one. So let's just start with this here. 130 calls, 385 ish, 375. Always gone in the money. I understand. It's expensive. Way more expensive, Bill. Um, and again, people are like, well, in the money has a delta of zero point 0.7. That's a 70% probability of success. And you only have 35. But that's not true because I have 2 times 35. So we have the same. In fact, let me actually show that. It's interesting. I'm going to finish filling that out and I will absolutely post that one. I promise. I want you to notice down here the deltas for these two theoretical trades. Oh gosh, I know you're not. No, 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 no. And again, I'm not in any way saying there's scales. Everything is a scale. In the money to out of the money, closer to this, further, closer. Setting a target farther away or closer. It's easier to get to one, but you make more money on the other. Setting a closer, You'll have less risk, but you're more likely to stop out, right? There's no right or wrong. There's levels on the spectrums. And, but I want to make sure we see all the perspectives. I'll tell you what, I'll tell you what, a lot of times that's the only way you can afford some of these damn things, right? Some of these expensive ones, you're like, wait, I don't think I want to pay 2,100 for a contract. Anyways, deltas are where here's what's interesting. Right off the bat, the in the money 105 is slightly higher than this one. But remember that as the stock goes higher, this is going to move and really start to slow down around 85 or so. But this one can go all the way to 170 before it starts to slow down because there's two of them. So it's 2 times 85 before it starts to slow down. So at another dollar or two, maybe $5, this one is going to accelerate and start to move faster. Let me see if I can't really quickly illustrate that concept. Oh, I love playing with the Greeks. Okay, so let's put one of these back on. So here's the delta of 70. Let's go back to today, tomorrow. The delta is 68. So let's say that tomorrow it goes to 120. My delta here is now 77. Um, okay. Now I'm going to do the same thing here. The delta is 58. And now when I go to 120, the delta is 79. So by 120, it's already past it. By 120. By 125, this one's now at 83. This one's now at 95. By 130, this one's at 110. This one's at 87. Like I said, it really starts to slow down. At 135, it gets to 90. This one's at 125. This is where it really starts to accelerate and make that extra money and where the out of the money can perform the in the money. Um, it's not in the delta, it's in the gamma. So the gamma is what allows this to accelerate. You have more gamma because you bought two, right? Now, what's the downside? You're like, well, of course, that just can't all be. It can't all be, lollipops and gumdrops in the forest. What else, Scott? Well, what about time? What about time? Here I'm losing $7 a day. Here I'm losing 29. So I better get more because I'm paying more. That's why I can only give it to the 23rd. If I go beyond the 23rd, this thing's going to really start to ramp up on me. And that's where there is concern. And if you don't understand the theta and how it's going to ramp up, then you should probably buy in the money before you learn how and why I empower myself to, go for that higher gamma. I'm looking for the gamma because the gamma is going to expand my trade faster. That's what the out of the money is going to do. I'm looking at theta as the pawn. What's the pawn? Something's getting sacrificed. We know it is. And if I don't understand it, then something's happening without me understanding it. And I don't want that. So, yes, I recognize that for me to get that accelerated delta because of the faster gamma, I am going to have a time decay. But remember, my strategy is I'm going out to the 20. I don't have to think about day to day theta. That was just an exercise for us, one little bit at a time. I'm already going out to the 23rd. I'm already planning on what's worst case scenario. I hold this for 10 days. At that point, the only way I hold it is if it's right. I'm not going to lose more in time than that because I'm right. Okay. That's the thought process behind the out of the money. So it's actually quite deliberate in how and why. And at the end of the day, if you have a well designed trade, picking the strikes is going to matter a little bit, not a lot. We already did a lot of the work by making sure we had a stop and where did that come from and a target and where did that come from and how are we going to position size and how are we going to, I mean, all that's already in place. That's part of our MO. Questions or comments? This is not quite fleshed out. Let's finish this. Finish it. Vol assessment is low, but a bit expensive. So we have to be careful. God, I can spell. Don't worry, I'm literate. Low, but a bit expensive. Preferred strategy. We're still looking at long calls. Expiration month. We are going out to the standard June 25s. Sample trade. I am looking at the 130 strike. That was around 375-ish or so. Risk per contract was about 230. Would it be better to go longer to tamp the theta? You're saying to go out to July. So if you go out to July, you'll pay more, but you will have a lower theta amount. And that would be my response would also be maybe. I don't need to because I've already assessed it for the duration of my trade, but it could be something that would be um something that could be viable. So let's run it. We've already decided we're going to go with the out of the monies. So now let's look at out of the money June. That's what I love about this model. This is the great what if calculator. I go out here and I say, well, what if instead of doing the June 130s, I do the July 130s? Okay. Now, what am I going to do? Now, they're more expensive by quite a look at that 645 versus 385. More money, more capital, but is it worth it? So I'm going to dial the risk back down by the number of options to get the risk 548 to make 2575. Oh, we may be onto something here. Bill, now there would be two considerations. Consideration number one is, can you afford two of these? It's a lot more now. I mean, it's in this market where we only have maybe two, three, four, five trades on. I would say yes. I would say yes. Right? Your capital on this is quite a bit more, but 2575 divided by 550 is 4.68. Bill, don't forget 4.68. That's your July option. Let me go back to this one where we're saying 2367 on 463. Oh, okay. You know what? No, for me. Reward to risk. It's a data driven decision. I go further out and I actually diminish my reward to risk a little bit, even though, yeah, I mean, I don't know. That's the funny thing. I haven't until I run the numbers. And if you're interested in options, this model will teach you options better than anything else, any book, anything else. What we just did, where you're like, okay, what's going on here? What do these things actually mean? And you can quantify it. Is so like you just or what if you're like, oh, okay, if I do this and this happens, then this, and then you're not like having to wait for 2 weeks for the trade. You're actually able to kind of play it out, see it, quantify it, and then And then I'll tell you, wait until you're like live trading a long call, then paper trading a bull call spread and a short put all at the same time. And you're like, okay, yeah, now I'm seeing some things. Right? The time machine. Love it. Is this recorded? It is, and I will post it. Sometimes I don't post these because it's like not that great, but I do feel like we had a pretty outstanding discussion on the model today. Like this was the advanced working session at its best. Really good stuff. I didn't even see Bob Roland snuck in. He didn't say hi. Bob Roland, what the hell, man? I thought we were better friends than that. Ah, okay. Yes, good stuff. Uh, good to see you too, sir. Um, love it. What a great discussion tonight. Um, and then we'll just pop in tomorrow morning. I'm gonna post pre-market tomorrow. I might post it tonight, but I might just post it like first thing in the morning, like an hour before we get on. I don't want to wake anybody up. I don't want it to come out too early. But here's your snapshot of it. Those of you who are here get the nope, that's not it. Here's the free preview. What did I do? Oh no. Okay, yeah. There it is. 50%. That's good. I mean, it's recorded. You can go back and watch it. I like that. I think it worked out pretty well. That's the final winner. The June standard June 130 call, 385. Cool. All right. It's good to see you all. Good discussion. I'll go ahead and throw that one on there so you can watch the recording of this. And then I'll see you in the morning, 15 before market open. We'll watch and see. Now again, if the futures are down, this thing is all bets are off. You can see the futures are actually on this was a little up. So as long as we're kind of in that vicinity, we'll go ahead and lock it in. Great to see you. I appreciate the extra time. Have a great rest of your night. And as always, happy trading.